I've been seeing a lot of panic lately. People are freaking out about the market dropping. A lot of people are talking about the tariffs and the trade wars that are happening ever since Trump took office. Some people are even saying that he's purposely killing the stock market right now for his own beneficial gain. But whatever the reason is, we know one thing for certain is that the market is going down. But here's the thing, there can be various different reasons as to why the market is correcting itself or if the market is going to crash. So before I dive into my personal strategy as far as what I'm going to be doing, I want to take a step back and talk about the difference between a market correction and a market crash, because if you understand the difference between the two, although they're kind of similar, but there's a big difference between the two, then I think it'll help you navigate how you're going to play in the market right now. Now, for those of you who just started investing probably within the last year or two, you got to understand something. The market is volatile, right? It's meant to go up, it's meant to go down, and it's super important to know the difference between a market correction and a market crash, and I'm going to break it down for you. A market correction happens when the value of an asset typically drops by about 10%, but stays under the 20% mark. On the other hand, a crash is when the market plummets quickly and steeply, and it could be by the double digits within a few couple of days. I don't know if you heard about Black Monday, but in 1987, Dow Jones dropped by about 20, it was over 20% in one single day. You can only imagine how the market reacted to such a drop. So the question is, are we in a market crash right now? And technically, no, we're not. But are we in a correction? And I would definitely say yes. In the last month, Dow Jones dropped about 6.8%, the S&P 500 dipped about 7.48%, and Nasdaq dropped about 10.19%. So you can definitely see that there's a decline. It's not happening within a couple of days. This is something that's been happening over the last couple of weeks to a couple of months. So you can see that the market's actually correcting itself right now, and it could be for different couple of reasons. And you're probably asking, well, what's the reason? Why is the market correcting itself right now, right? So as many of you know, Trump is talking about tariffs. He's trying to implement tariffs in China, Canada, Mexico. There can be trade wars. There's a lot of uncertainty in the market right now, and uncertainty is not good for the market. The market doesn't react good when there's uncertainty. It's a negative thing, and it tends to drive the market down. And speaking of that, do me a huge favor. Please like this video, subscribe, and comment down below if you are finding any type of value in what I'm telling you. I'm definitely going to make a video about tariffs, some of the pros and the cons. I want to touch base on it a little bit. I don't want to do it in this video because I think that's for a whole different topic. I just want to stay on the topic between a crash and a correction right now. But definitely hit the bell notification. That way, when I drop that video, you'll be notified. And again, it just kind of helps the channel out for a small creator like myself. So definitely like, comment, and if there's anything that you want me to talk about, just comment down below and I'll make a video for you. So with that being said, the most important thing if you're new to investing for the long term and then you're looking at your account and you see a sea of red is don't panic. I know that's easier said than done, but if you're not a day-to-day trader or if you're not somebody who is going to retire soon, I don't think it's going to affect you in a big way. If you're in it for the long term, then you're not really losing any money, because at that point you just have an asset that's worth a little bit less than it was yesterday. But as long as you don't sell that asset, you're not losing money. And if that asset goes up and you're in the positive, in the green, you're not really gaining any money at that point because you're not selling for a profit either. Remember, the market moves in cycles. What goes up will come down, and what come down goes right back up. The market tends to correct itself when something is maybe overvalued. Again, there can be a couple of different reasons. I think right now we're living in a situation right now where tariffs is stressing a lot of investors and people out. They don't know how the market and the economy is going to react to such a thing. Obviously, Trump has plans to make it a positive thing for our country, but you just never know. And if you're an elderly who's planning on retiring soon, again, that's something that, you know, it might be affecting you a little bit more, just because the value of your assets, the value of maybe your 401k, of your Roth IRA, it's going to be worth less today than it was yesterday. So if you're planning on taking that money out within the next couple of months to a year, we don't know how long it's going to last. It can kick back up within the next couple of months. But if you're somebody who's looking to take that money out, then it's going to affect you in a negative way. I'm not saying don't freak out for everybody. I'm just saying for the people who are in it for the long term, definitely stay calm. And with that being said, here's what I'm personally personally doing. I'm definitely buying into the dips. I'm dollar cost averaging. I'm seeing the red as a opportunity to buy. I'm seeing these stocks go down as a discount. And sure, there's definitely risk. If I start buying the dips, it can dip even more. And just keep in mind, just because I'm saying what goes down might go up, whatever stock that you're investing in, definitely do your research, because there's definitely stocks that keep on dipping and they never go back up. I'm talking about the big stocks, the S&P 500, Dow Jones, good bonds that you're in. Those are the ones that I'm talking about. If you're investing into other companies, definitely do your research, manage your risk, and then buy into them if you see that it has good potential. Managing your risk is such a key when you're buying into the market. One thing that I do want to say is, if you're doing research on stocks, bonds, whatever the case is that you want to invest in, don't go on YouTube and start listening to all these YouTubers. A lot of these guys don't know what they're talking about. They're going to tell you to buy into a stock that they might not even be in, and you're just going to lose money. If you're not doing your research, then you're just gambling at that point. At that point, might as well just go to the casino, put your money on red. You have a better chance of getting some type of a profit. So definitely be smart about it. Definitely don't be lazy, because at that point you're just throwing money. You're going to lose 99% of the time. And with that being said, the money that you put into the stock market, make sure it's money that you're willing to walk away from. Don't go into your savings, don't go into your 401k, pull everything out, and then you see the market dropping and you're going to buy everything at a discount, because at that point you're putting yourself in a negative situation. You have to invest what you're willing to lose, whether it's $100, whether it's $50. Some of you might be 500 to 1,000, couple grand. Whatever the case is, the money that you're willing to put in and not get back is the money that you should be investing in. If it's only 25 to $50, then hey, just throw 25 or $50 in. If it's not gonna hurt you negatively, if it goes, then I think that's the type of money that you should be investing. Don't start investing your savings into something, and if you lose it, because it's going to put you in a horrible situation, and at the end of the day, it's not worth it. Instead, focus on solid long-term strategies. Invest into well-established stocks, bonds, and index funds. And as the prices fall, you might want to buy slowly. Definitely don't put a bunch of money into it, because again, it can keep going down. Take your time, understand the charts, make well-educated decisions, manage your risk, and like I said, only put in what you're willing to lose. I hope this helps. I hope this gives you a little bit more clarity as far as how the market is reacting, why it may be reacting, and the difference between a market crash and a correction. If you have any questions, please comment down below. I'll make another video just for you. Do me a solid favor, like this video, subscribe, comment, hit the bell notification, do it all. As a small creator, it definitely helps me out. And if there's any type of value that I gave to you, then I really appreciate it. And until next time, love you guys all. Peace.